Hey everybody, it's Michael Martin. Happy Monday. Hope you're doing well. Hope you had a good weekend. It's World Series time, so I like watching the games. Um, so again, I want to come back. I've had a lot of phone conversations with some folks. Have reached out for help, a bunch of emails back and forth, and a lot of messages. And I think it's becoming more clear to me that there's a lot of people struggling out there, especially the newer traders. And so I don't believe tough love is a really good coaching technique because it's really easy, right? Anybody could do it. So the best thing to do is to try to listen to a lot of people, incorporate what they're trying to say, and then try to help them come up with a creative solution for an action plan. Because just bitching about it or telling you that you got to man up, I think you inherently would know that, right? That's kind of the point while you're probably complaining like, so what are the solutions? You need to change your behavior. You can either do that on your own or you can work with a coach who can help you do that. To me, whether you do it with a coach or not isn't isn't important, but it does measure your taking action. In fact, measures your relative strength to actually want to fix the issue. Because nothing's going to change if you don't take the action. And if you don't know why you're doing what you're doing, it's likely coming from your subconscious. So, to me, I think the thesis of today's show is that if you sit around taking small gains, you're going to be a small trader, and that's going to go on forever. You have to start thinking big, and if you don't have experience with big numbers, you need to learn how to get comfortable with big numbers. So if you're sitting home saying, "Here's my R and here's my target," as soon as you have a target now, you've put a limiting belief on your upside because your trading behavior shows up on your P&L. So say you have $200 as your R and you're 600 on the upside. You can say, well, hey, everyone's talking about 3-to-1 ratios, but that's great. When you compare it to minimum wage, look at your P&L and see what your P&L is, according to minimum wage. Because to me, small traders stay small. And I don't think in price targets. I let the move unfold for as long as it possibly can, and I sit in the pullbacks. There's nothing wrong with pullbacks in an upward move. And if it's not going up, don't buy it in the first place. I looked last week. I very rarely look at indicators or things about the market's health because I have an intuitive sense after all these years. But I said, suppose I was starting. Let me go take a look and see what's out there. What would the regular Joe see? And so you can talk about breadth and this and that. I typically always go to 52-week highs and lows because that to me is the most objective without putting labels or names on stuff. Just see what's making new highs, what's making new lows. And I don't care about weekly highs. I don't care about daily highs. Those are insignificant numbers. And I think Monday, there were 13 names of New York Stock Exchange and NASDAQ traded stocks here in North America. There were 13 stocks that made new 52-week highs a week ago today. 3 of them on New York, 10 on NASDAQ, and a whopping 706 names were making new lows. Now, I looked at those same numbers for the rest of the week. You can go look it up. I won't bore you here with it. And it was, every day there were 40, 50, 60 times more names making new 52-week lows than new highs. And you can draw your own conclusions about what you think that means. But when I look at a trader and his or her behavior, trying to buy the market long or buy pullbacks, again, is a piker type of mentality. This is a market where things are going down. The tenor is negative. I think people want to wrap this year up and probably want to wrap up 2024 already, given all the things that are going on in the world, especially with politics and all the conflict. It weighs heavily on the market. So we have a bunch of small traders who have small accounts trying to nibble on the market on the long side, but the prevailing trends are down or sideways. And so to try to trade against all that power, you put yourself in a very, very bad spot because you want to be optimistic. But you have to read the tape. You have to see what the overall tenor of the market is. And so the act of a pro is, what pro behavior is following your rules, but not also forcing trades because you feel like you need to be in on the action. You need to sit on your hands. And just like you need to enter risk and then put in a protective stop, a day where you don't see opportunity, all right, it's absolutely fine to just not trade. That's a pro move. This is why I say it's far better for you to have one setup that you can use across any number of instruments, stocks or futures, rather than try to have 18 different things to do across like the E-mini. That's small-minded trading, as far as I can see. Now, if you're Paul Tudor Jones, you can laugh in my face, and I'll say, you know what, you're right. But if you have less than 5 years' experience and you have yet to show that you have any type of a feel for the market, your trading style is more of a coping mechanism, right? And a tough love here, it's not tough love, it's just speaking the truth. If your account is underfunded, right? We're going to talk about trading challenges next. If your account is underfunded, you're acting from the get-go in desperation because you don't have enough money in your account. You feel every tick against you. You're probably watching it in 1-minute bars, looking for diversions from the higher time frames, like 3-minute bars. So to me, this is all built-in small-minded behavior. And if you do small-minded behavior, you get small-minded results. And that means your account stays small. So the things that you're actually doing that you think are going to help you grow your account, in fact, don't help you grow your account. The things that help you grow your account are finding winning trades that are making multi-period highs and learning to sit with the risk overnight and over the weekend. I admit there's probably 5 or 6 guys who took $1,000 and turned it into 10 million. Perfect. But I would argue that those folks probably had a good feel or they were able to develop one pretty quickly. It's very rarely that you can get rich making $200 on a trade. So where does that leave us? You need to fund your account with more money. So where's that money going to come from? I don't know. Get a side hustle, pick up new money. Don't upgrade to the new iPhone. You don't need it. Save that $100. Look at how much you're spending at Starbucks or Pete's or whatever your local coffee joint is every day. Add that up. Look at the streaming services that you're paying for. Because the money's going to have to come from somewhere. And again, I would look at your behavior. And this goes for the traders who reach out to me that are making 7 figures. Their lifestyle might have grown geometrically beyond what their income is. So you have to have a pullback, right? You have to have a pullback on your spending. Even 501c's, foundations, and endowments of colleges, they have an investment policy statement, which is what you would consider a trading plan. It says what they can invest in, how they can do it, probably asset allocation, all the fiduciary stuff that they need to be concerned with because 501c law is pretty rich with nuances. You can't use debt in a lot of circumstances because it triggers taxes and this and that. But anyway, I don't want to get into 501c. They also have the better ones. They have they have a spending policy statement. So they have an investment policy statement that says what they can do. And then I think the best ones that we consult to also have spending policy statements that says, okay, here's our endowment. It spits off X amount of money in rates of return. And what we don't want to do is have a monster year in the market and then up our spending to match what we made in the market. So an example of how they might do it would be like take a rolling average of returns over, say, 5 years, and that kind of becomes the basis of how they make their decision so they don't get psyched out when they have a low year and overspend, and they don't have, they don't ramp up their spending when they have boom times. So you need to, if you want to do this, you need to find a way to keep endowing your account so that you can get into mid 5 figures. Because if you don't get to that spot, to me, you're always trading with scared money because you just don't, $50 is a 1% move against you in your account if you got 5K. So it's very difficult. And I know, well, Mike, I'm doing my best. Unfortunately, though, this isn't a business for small timers. If you want to make big money, and I don't mean to crack you over the head, 5K isn't going to cut it. There's just not enough money. And unless you can dissociate from the money, think in percentages and say, look, I've put a trading grub stake in an account. I'm going to risk all of this to learn my craft. This, in fact, is prepaid tuition, just like a phone plan. It's prepaid. It's prepaid tuition. If I walk away from this process with more than I started, Well, then I probably have a bit of a knack, or I got super lucky. But you have to be emotionally prepared when you walk into a trade, because you should be thinking 500 to 1,000 in terms of rates of return on a trade. So how can you do that if you're trying to trade, two micro contracts, feeling like a winner, taking $150 or whatever out of the market? You're not going to grow your wealth by taking small gains. And so your whole life at that point has become a coping mechanism to do the one thing that hits you the most emotionally, which is I'm watching the market minute by minute, because I can't feel the burn of losing $100 or $200 on a trade. You have to emotionally detach from the money and stop thinking about what it can buy you in the world of consumerism. Then you have to pull back your spending and say, every week I should be able to find $100 out of my lifestyle. You got Disney Plus? Bye-bye. Bye-bye, Bob Iger. I love you. But it's not time for that. And it sounds small, but when you add up where all your money's leaking, I guarantee you could find $100. So say you can find $400 or $500, right? And your account's $500 a month, and your account's $5K. That's the equivalent of getting a 10% return every month. Boom, pay it off. I don't want to get into financial planning, but if you're carrying credit card debt that have APRs of anywhere from 19 to 30, I can get you 30% return right away. Pay those damn things off. Because if you don't have any skill, you're not going to make that money or more in your trading account so that the math works, right? Hedge funds borrow money from prime brokerage at call it 10%, because they know they could make 50%, right? So they use leverage to their advantage. When you're newer, you can't play those numbers even though you understand them financially, because you don't have the skill yet. And so I would cut expenses. I would not buy the new Air Jordans. I would really cut my spending down to the absolute necessities. I had to do that because there wasn't a lot of other juice left around. And I can share with you, I can remember as I'm sitting here, there were times earlier in my career where I had like $100, $120, and I had 14 days left in the month until the next payday. And I had to stretch that money. And the way I did it was I left the money home. I didn't even bring it with me. I left it at home because I knew if I was in New York City, I would find a way to spend it on lunch, because I just couldn't take it anymore. And I was like, I kind of did my own version of fasting. I'd have a really healthy breakfast, and then I'd go to work, and then I'd come home and eat dinner. And there were lots of days where I didn't have lunch. And so I come from that experience, and I know what it takes. But you have to understand, while I feel it's cathartic to complain, and it might feel good because I'm a safe guy to reach out to, at the end of the day, only you can control your destiny by changing your behavior. 2, save the money on the trading challenges. Those 2 are coping mechanisms. If you're going to, when I hear people doing these things, it tells me how little they value their money. Because it's like, Mike, I'm broke. I can trade as if I have this much money. But the thing is like, if again, you don't have any skill, wait until you develop the skill, then go do the trading challenge so that you can start making money and get a payout right away. The trading challenge to me isn't some paper trading methodology that you could jump into right now and wing it. Because again, if you're paying $50 a month, over the course of the year, what does that add up to? I would take that money and put it in your own account. Right? So I don't feel that these things are the panacea that there are. I think they're a way to kind of like take advantage of a market that's desperate for money. And if you've been doing it for 6 or 12 months and you haven't really been able to pass muster, you need to stop. Stop. They'll always have sales going on, those 80, 90% sales or whatever, which is like, come on, who has a 90% sale? Isn't it like folks that are liquidating their businesses? Or is that the gimmick to try to make you say like, wow, it's this much here? To me, it's pricing. The goal is to get that dollar value from you originally. So they just put a number, they cross a line through it, and they say 80% off because they want you to give the number that you're giving. And they frame it as a big discount. but any of the gains that they're paying other people are coming from your fees. How does that make you feel that you're endowing the traders that are actually succeeding? Because that's what's happening. Why don't you just do it in the market where you can actually make the money? Or best case, save it and not lose it. So again, I know this goes against conventional wisdom, but there's no other voice of reason out there that sees this stuff for what it is, which is all of it's basically epic bullshit. And so if you want a trading challenge, endow your account, save your money, cut your spending, and learn how to hold on to your winners for as long as you possibly can. Stop watching the tape. Stop looking at the thing in real time and watching the screen all day. Put your stop in and walk away. That's the best you can do. And until you get comfortable understanding that I'm going to lose $200 as I try to make 6 or 1,000, right? You need to think in terms of bigger numbers, because those bigger numbers add up to your wealth. Again, if you're not clear about what your goal is, then it really doesn't matter, right? Because you're just doing this as a pastime or as an enthusiast, right? And there's nothing wrong with that. You'll learn a lot. Hopefully you'll learn a lot about yourself. But if your goal, like for me, I wanted to change my net worth because I knew what working class was. I came from that, and I worked really, really hard. By the time I got to Wall Street, I had been working for 10 years, and I was kind of burnt out from the labor racket. You see, I knew what it was like to work hard, and I made a lot of money working hard. But the opportunity, there was no equity. I had no equity. I was a day player. I was like, if you go to imdb.com and it shows you all the movies and who starred in what and who's directed what, you could see that there's a lot of actors that you might recognize who had like, I played in one episode of this, one episode of that, another episode of this. And after 20 years, they have a lot of these one episodes as character actors. They weren't the leading men or women in their own deal. Now, I guess if you want to act, it's better than nothing. But, you know, what do you think the royalties are when it's randomly you on a show of Hill Street Blues or NYPD Blue, and those things are in rerun or streaming? You get a check for $15. I mean, because I looked at trading as a vehicle that I could change my life and go from blue collar to white collar, which is kind of how I thought about it at first. And so what I see is a lot of blue collar activity with white collar kind of dreams and aspirations, but sooner or later you have to converge your behavior with your belief system. And if you all want to, you know, talk about Jocko and Goggins and all these guys who are like, do it, motherfucker, when are you going to do it? Because if you don't feel the burn right now, it's not going to come and kick you in the ass randomly, right? So this is just some straight talk. Like you need to get comfortable being a different person. You need to change how you feel around money, okay? And so anyway, I've been going on for 20 minutes, but I know everyone's struggling. We're in a weak market. The point of the matter here is to sit on your hands. If you haven't shown that any of the dozen setups that you're looking at for the E-money or actually E-mini contract or the mini NQ or whatever it is that you're doing, you have to stop. What do you think's going to happen? To me, you're shoveling sand against the tide, and it's just going to roll back up on shore. And all the hard work that you think is virtuous, it might be in your culture and in your household, but it's not going to change your net worth. So again, I ask you, what are you doing this for? You know, the folks, that's lesson one. And it's not to buy a Ferrari. It's not to have a big house. That's not the point. Those are, again, consumerism. This has to come from a very deep spot and about how it's going to change your life and what's going to do for you and your family. So you have to think in terms of feelings. And right now, the feelings that you have are to fret about losing $200. But, you know, you really need to think about increasing your wealth. And doing that with small bits of capital is very, very difficult. And they say 94% of the folks, I think it's more. I think it's probably more like 99. I think it's a very high percentage. Because there's a lot of folks that just stop and stall and they leave their accounts funding. But when they don't have an idea of where to go or what to do, they just stall. And they lose their confidence because they never really had any, and they didn't have a trading plan. They didn't have a set of goals. They just heard somebody say, you can follow my system. So they went and they bought it, because they want to buy their way out of it. And this is what I'm talking about. Many of you have done Discords, you've done trading challenges, and you get nothing to show for it. So that would make me bitter. And now if you continue to do that stuff when you're not getting the results, it's really on you. And I can't help that person who's not willing to help him or herself, right? Because the first part of it is that you have to admit that everything that you've done hasn't worked, and therefore you need to, just like in portfolio management, you need to stop doing losing behavior. Losing money isn't being a losing trader. That's part of it. But losing behavior is going to keep you broke and treading water for decades. It's just the way that it works. All right, little straight talk today, just kind of summarizing a lot of the things that folks have said. You need to change your mindset around money. That's the focus of our work here, so that you can change your lives. It's going to be a good week of lessons. You could certainly take some homework assignments out of this and start making the changes. It might not happen overnight, but at least you start to think about the things that are important to you and the things that are going to help change your life, which was really the point of all of this. All right, any thoughts or concerns, you can write to the channel here, or you can reach me through the blog. I'm always going to help you and point you in the right direction, but I'm not going to tell you bullshit and be like, yeah, man, it'll be cool, it'll work out. Just give it more time. Because that's not a solution. That's a way to brush people off. Anyway, thanks very much for being here. I'll see you tomorrow. Okay, everybody, thanks for being here. Please take a minute, like and subscribe to the show. You could also leave a comment. I don't have all the answers, so it's good to get some feedback. Also, if you would like to support the show, check out the links below. You can get the free audiobook of The Inner Voice of Trading, and also information about the course that I teach with Victor Sperandio. Thanks for being here, folks. I'll see you tomorrow.